Welcome everyone, my name is Mike Hamilton from Trade the Easy Way, and I'm just going to show you what I'm looking at in these charts. And you are looking at the weekly on the NASDAQ 100 index. So I'm going to talk you through that, and then I'm going to explain why I am looking for this sort of direction and what I'm doing about it. So you can see that we have gone above the 26,000, recently tested under 24,000, and now we are pulling back into this area here. So what I'm looking at for here is a repeat of this here. So we've got a sell signal, or certainly a lower close. We fed back into that resistance area and then capitulated and only bounced after the first or second week in April this year, but having closed above the 50-day average and held, very little red in these charts. It's been an incredible run. That's a decent sell signal there, and we still went up. So I'm just looking for this to play out back into this range, and if I'm right, we'll sell around about the 26,000 mark, close underneath 24, and then at least come and find the 50-day average, and potentially come and find the 200. So this is the FTSE. You can see I've ranged this year's move, the high and the low, so from 75.35 to 99.35. Decent sell signal, getting a bit of a pickup this week, so looking for that to move back into about 9800. It could potentially, if we close above 93.35 and we hold 93.95, we could go and see the 10,000 plus, but I'm looking for this to drift back into these highs end of this year and then fall over, because we've got the budget tomorrow. I'll talk to you on the 25th with only 3 hours of the US market to close. So if this starts to fail this week, then we could see this move much earlier. I'll explain why I'm so bearish in a minute. And what could save this market is, so I'm looking at the dollar on the weekly chart. You can see this huge rolling over of the dollar into this area here. Whoops, you can't see it. Let me just shrink it. Right, so the dollar index on the weekly chart. Huge push up here into 22. We dropped, subsequent weak moves into this area here, and then we dropped. Now that did the markets a big favour, and once we came out of 24 and got going in April, this dollar collapsed and fell right into a key managed level of support. If we start to roll over here, that might well save the markets, but I'm looking for the dollar to pick up further and to confirm the next bearish move in the indices and stocks. This is one of the things that a lot of people are looking at, and of course the hedge funds are looking at this. We had these are the S&P 10-year price earnings ratios. So and deviations from averages. So if you look at this is the historic PE 10. 10 is a good, healthy, modest ratio. But as you can see from this chart, strongly overvalued here. So we saw that in the dot-com boom and the precipitous fall, and we are now very close to the COVID 2020 highs, and possibly busting through this. This was produced in September, so I suspect we are up into these levels now. Obviously pulled back to some extent, but what I'm saying is, and what a lot of people are saying is, we are seeing huge an extension in the valuations of companies. I think Nvidia is can't remember the numbers now, but you're talking about the P ratios of a couple of hundred or more. It's ridiculous. Some of these markets, some of these businesses would have to have exponential growth over something like a 20-25 year period to warrant the current valuations. So it's just got way out of whack. And when the markets get out of whack, what do? They pull back. So we had a 3-wave correction in the valuation ratios, came into support, and then the market got balled up again. But now we are way too extended. We've got some very, very heady, frothy valuations with a lot of headwinds. And my overriding memories of the 07-08 crisis is the way in which the gold really spiraled high with the dollar. So all the safe havens were getting bought. That's why I'm looking at, this is the gold on the weekly chart, that's why I'm keeping a very close eye on the dollar, because if the dollar starts to pick up and this stays high and even pushes into the 5,000 mark, which is very possible here, then that is basically a flight to safety. So on the subject of gold, and yes, we have experienced this spike higher, saw the RSI get very high, but as I said to you many times before, this RSI can stay overbought for as long as it likes. It's an indicator, it's not a confirmation, it's just an indicator. So the RSI has pulled back into just under the support line here, so gold is still getting bought on dips here, so we could push through to 4,400 and then go and find 5,000. 51.47 is the extension on this range here. Of course, if we close under 4,000, then we need to reconsider. And yes, this could be a blow off. We have got a sell signal up there. It's not an engulfing bar, but it was certainly a deep lower close, and we're struggling with this range now. We are seeing some selling every time we get back into 4,200, but in the meantime, as long as the 4,000 holds, as long as we keep closing higher and the volume keeps coming in, then gold has an opportunity to push higher still. Keeping on the theme of weekly charts, let's just look at oil. And where's oil going? And you can see that, no you can't, hang on. So we got the post-COVID bounce took us up here, lower high, divergent RSI as that was pulling up, and here we are really struggling. So the high dollar, this bounce in the dollar has capped the oil. There's a lot of oil sloshing around the world at the moment, so if the Ukraine-Russian war does resolve itself, there's going to be a lot of cheap Russian oil coming in the market, and that could see the oil drop under the $50 mark, $50 a barrel mark, and potentially go lower. So be very, very careful. If you're in oil stocks, just bear this in mind, be very careful. And bottom picking, which I do, I don't shy away from that, but equally I'm very careful for resistance levels and follow-up confirmation. I got very concerned about lack of volume as we moved into £4, so wasn't convinced that this was going to do something. Markets often do double bottoms if they are going to reverse. So I'll stand aside and see how this behaves, and then see if that could push higher. EasyJet, I think the board did an update today. This looked very good into the early part of this year. A really sweet move off support. They even closed above resistance, but then immediately closed lower. So very bearish. A new high and an immediate close lower following day, following week, depending on what time frames you're looking at. Be wary. There is a lot of support down here around that £4 mark, but we're under the 50-day average. I think this could come and see the £4 mark again, particularly this time of year. EasyJet tends to pull right back anyway, because as we go into winter, they do not make the profit levels that they do in the summer. So cyclically, this one does tend to top out in the summer, drift low in the winter, and then if we hit support, find volume, and expect this to push up. It's a good stock. The board are doing some good things, getting into more of the package holiday market. So I think the long-term future of EasyJet is good, particularly with low oil. If oil really starts to get buried and does start to dip and stay under that $50 mark, that does the airlines a huge favour. So just keep a close eye on this. If you're in this looking for longer term moves, just be wary of key trend lines and volume. And let's see, because if we do come down to £4 and don't hold £4, then we're going to see some lower numbers. 350 is the next number if that comes down lower. So if this is a bearish pattern, we could very easily see 450, 450, 440, 450 touched again. If that ignites this and sees some volume, then expect this to pick up and start to climb. But so just be wary. If you're looking to get in this, I would wait and see if we close above £5, particularly what I just said about the cycle. This is Sabre. I mean, again, these are all weekly charts. So this time of year, I think it's good just to look at the bigger time frames and just really get a grip of where we are. So Sabre had a good 1, 2, 3 wave move, corrective move after all this selling. So I got in, I can't remember, I think I got in, remember it's 120, 125, took it off at that high, got in about the 130 mark, so I am taking a little heat here. So I'm swing trading it. Once it swings higher, I'm out. Once it swings lower into support, I'm in. If the 125 holds, I'm get concerned about the lack of volume here. But if we can close higher up 130, 135 on volume, I will even add. If we start, I've got a stop under here. Can't remember the exact price now, but if I get stopped out, I'll walk away and then see what these are doing on lower numbers. I was in Polar earlier in the year, so this has had a sweet move into a lot of resistance up here. So it dropped into 21 levels, pulling back, and this is again a very nice, powerful corrective move after all this selling. Got closed above resistance, but then gave way. Saw a lot of profit taking. Concerned about volumes down here. And bear in mind, I just talked about the indices. This could drop back further. Let me move this because that's way out of date. So 322 was the April lows. 322 up to 588, and here we are pulling back. Alright, so this is a very good dividend payer. So if we could easily see 460. If something really blasts up, I tend to find, I call it the boomerang, I tend to find it comes and revisits that breakup area. So if we come down to 450, 460 and hold on volume, then I will be interested. In the meantime, that's obviously seen some profit taking and might see more. This is Softcat. I was in this for a relatively short period. yeah, I think I was in this. Where was I? No, it must have been this move here. I bought this support and then took it off at about 15.75 or something. Again, concerned about volume. So we're sitting on the 200-day average here. So if this holds and we start to get some volume creeping in, watch out, because this could move really well. In the meantime, I'm out and I'm staying. I'm just showing you the importance of the volume here. So three-way corrective move. This is man group. So breaks up here, pulls back to the breakout, so it does a boomerang, two-wave move back to 140, 150, and then goes on a run into, I think, 225, 230. Watch out for this one, because if we pull back into this 185 on volume, I'm interested. But look, when this does pick up here, look how the volume picks up. These are the you need this kind of volume for that kind of move in this stock. So look for where, if you're investing in the stock, look for where it has moved up, reflect on the volume and the levels it came from, and see if you get a repeat. But once we got up here, we didn't. We started, the red bar started to creep in, and we're pulling back. But now this is a key level of support, and we've got a 50 and 200 day cross down here at 185. Keep a very close eye on that one, because if that gets down there and picks up, I'd expect to see 250 plus. All right, this is a good stock. This is potentially a nice big bear flag, bull flag. Sorry. So here is your mast. And we saw profit taking wave patterns. This move just went right into the last sell zone. So three-way correction. The boomerangs back to a breakup area, and then we set off again. Okay, so these are key pivot level, key pivot support down here, key pivot resistance up here. So this is a great box play. So every time this comes to the bottom of the box, buy it and see if it can go to the top of the box. If it closes under 150, I would personally get out and stay out. Right, this is my 2025 nemesis. This is wheat. Let's take this ratio. No, let's leave that ratio on. So I've got this pinned to $5 and 13.44. So the Ukraine war breaks out. Ukraine is the wheat basket of Europe, and this fires up. There's a massive sweep. So all these little dips got bought, and then it breaks here. There's the structural breakup. Does a corrective wave back into it, but sells at resistance, and then does a much deeper correction and starts all over again from the breakup area. Okay, so this push into 720 back in is it mid-August, September last year, got sold into, and then we came right back. So my theory is this. If you're a farmer, you're not going to want to plant a crop that is this weak. So if this wheat stays that low for that long, I think the planting season is going to see much lower levels in wheat. You're going to see end up with lower storage levels, and then hopefully this will break out and give me a nice profit. In the meantime, I am sitting on a small loss. If this starts to hold $6 on volume, I will get back in. I will add to it, I should say, and then look to see if we can get up to at least 8. Break up, hold 7, and then potentially at least go and see 8, and who knows, maybe even 9, 10 plus. Alright, but my theory is that wheat isn't going to disappear off the planet. we're all going to keep eating wheat to some extent, and ultimately the fundamentals could change in this one. If it does change, we will need to see this pattern. So 3-4 touches of the trend line low, they all held. Sometimes in commodities in particular, and stocks as well, it drops underneath the key level and then immediately pulls back. So we could still see wheat drop under the $5. If it immediately closes higher, that is incredibly bullish. Silver did this way back before it started this most recent strong trend, and it's very common in commodities. In the meantime, I'm hoping it sustains these levels. There is a gap there at 522. Let's see if that does come and test 5. We're very close to that now anyway, so it would make sense to go and find 520. Let's see if we do and we hold and then we start to push higher. Alright, I've just switched over to some American watch lists. I'm just looking at this one. I've got to remind myself what this is. PACB, still on the weekly charts, but this has been consolidating down here at the 150, 170 mark for a very long time. Look at the volume coming in on this. Not so long ago this was $15 and we're down here at 264, so this could be one to watch. I would certainly only go half size on a stock like that, but because of its deep selling and the fact it's taken a long, we're talking about 2 years. It's been doing this for 2 years. This is the highest it's been since this time last year. So we're already hitting resistance. That's why I don't want to jump in at resistance. What I want to do is jump in at support. So stocks like this, but let's just look at the reason why I'm looking at the US list is because I want to show you these sky high tech stock. So this is Palantir. This was consolidating down here at 18, and we just recently seen 220. So this stock has just absolutely shot up. So if I look at the ranges at that high, Palantir, PLTR, and then drop right back down to where this came from, you can see it can go all the way down to 1386, which will be the breakup area from July this year. So it can come all that way down only to retrace back into where it was 4 or 5 months ago. Okay, so I'm not saying these stocks are going to crash. I'm not saying these stocks are not viable. All I'm saying is they've met a horrendous level. Look at the divergence there. Made a new high and a lower high in the RSI. Of course, if you're a MACD fan, then that would be shown up in that as well. But so we've done a 1, 2, 3 wave into that 210. Now we're doing a 1, 2. I would have thought a 3-way correction could easily come down to this 11,325. Okay, so that's Palantir. Let's just look at Nvidia. So Nvidia is similar to Palantir. Let's look at the ratios on the last move. So as with Palantir, this could come all the way down to 16.5, or the main support's down there at 150 on Nvidia. So a lot of they had results, didn't they? I think it was last week. So the results were sold into. We'd already seen some selling before the results came out, and now we are looking for a deeper correction, deeper pullback. If that would come down to 13,475, huge opportunity to buy. So if that comes all the way down to the ambush zone, which is where we broke out from in June, so that's not a big ask. All we're saying is that could come back to where it was in June. June wasn't that far away. So these are opportunities. So although I think stocks are incredibly expensive, these, particularly the tech stocks, that are really impacting what's going on in AI. These guys are making chips that are a key part of the AI momentum. So they are not to be ignored, but they just need patience to see where they land after this exuberance. Alright, so what I'm doing at the moment is I have been taking profits in the recent months, just concerned that there is a lot of fear out there. The markets are very expensive, and having 2025, a lot of stocks had a good healthy run, particularly the tech stocks, and the Nvidias and Palantirs of this world do resemble bubbles bursting. But once the markets are settled, these will be incredibly good opportunities to get back in these markets. Okay, so I'm taking profits. I have been buying dips in gold. I'm sitting in real assets like wheat. I'll be spending more time looking at other soft commodities, energy, and precious and non-precious metals. Really parking my cash, parking my money in real assets, and coming away from speculative stocks, speculative situations in the short to medium term, possibly longer term. Alright, so that's what I'm doing here. More information to follow, but stay safe, and I will wish you well for now.